we've had this impact of inflation and interest rates. It's maybe not all bad news.
I would say the fundamentals of the economy are actually quite good, and they have been. It's a cycle. It changes. We will see things normalize.
Sterling, I was looking at a few headlines recently regarding the U.S. economy. I'm going to read a few of them to you,
Okay.
and I want your thoughts. So, U.S. economy continues to grow at a solid pace. The economy's growing at a slower pace than expected. The economy's booming. The economy's strong despite inflation. What are your thoughts as I read through those?
Well, I've always complained about a two-handed economist because they always say, on one hand it's this way, on the other hand it's this way. It's like, just tell me what it's going to be.
Yeah.
You know, it's like kind of like the weatherman. I want to know what the weather is going to be. I don't want to go out with my bathing suit if it's going to be raining. So,
Right.
And that's where people are right now, is they don't know whether with a bathing suit or they need a really good coat right now, because it's not feeling like it's a booming economy right now.
Yeah.
But at the same time, the economy isn't that bad. Now, is it great? No. What's happened right now is you have interest rates that went up faster than ever before. We've never seen interest rates go up so quickly. And that's because inflation was so high. There was so much stimulus related to COVID that created an inflationary pressure in our economy. That combined with shortages just was a recipe for disaster. So here we are paying the price with higher cost of everything to slow down the purchases. What they did, of course, they raised the interest rates up really, really high in addition to inflation. Wow, what a combination. We had people who had some of the variable rate loans, particularly credit cards and some home equity lines and other lines like that their payments doubled, tripled, and even more than that. It was a real eye-opener. And it's hit the people really hard that way. But it's not the end of the world, and it will change. It's just part of the economic cycle we're in right now.
So correct me if I'm wrong, inflation, right, is probably what a lot of us are feeling, right? When we talk about the economy and we read headlines that say it's booming, it's just like, oh, well, my economy is not booming. I don't know about the U.S. overall, right? But so that's the biggest factor, you think, and cause behind what people are feeling?
Yes. Well, it's a combination. The Federal Reserve likes to see inflation somewhere in the 2% range.
Okay.
Well, we know it was much higher than that. And I felt a lot higher than they were actually reporting based upon the price when I go to the grocery store. So prices went up a lot. And then in order to slow it down, what the Federal Reserve does, their tool they use is interest rates.
Yeah.
And we've been really used to abnormally low rates. I mean, they were really low. But now they really crank it up higher than it's normally is. And then all of a sudden you have this problem where you have not only the higher cost, but now higher cost of financing everything, including homes, cars. It all costs more now. But particularly the big hit was those variable rates that just adjusted immediately and really hit people hard.
Yeah. So we went from, right, if I had a HELOC, having an interest rate that was very low to the next month it drastically changing.
Absolutely.
Okay. So obviously we've had this impact of inflation and interest rates. What would you say as far as it's maybe not all bad news?
I would say the fundamentals of the economy are actually quite good, and they have been.
Okay.
And that's why we're still seeing rates being high, because people are still spending, they're still employed. We have a really low, relatively low unemployment rate.
Yeah.
Particularly if you go to some of the states that we're located in, Utah, Idaho, they're really low unemployment rates. So people are employed, they're still earning a decent income, and they're spending very healthy.
Yeah.
So those are if you look at the economy, when you look at recessionary pressures, consumer spending is a big factor in that. And we're seeing a lot of spending right now.
Okay, so we're still spending even though interest rates are high.
The problem is we're probably spending more than we should, given the current situation. I think people you're seeing the debt levels increase.
Okay.
And that's going to create additional pressure, financial pressure. And we're seeing that right now with delinquencies and bankruptcies on the rise as people perhaps are realizing, I probably shouldn't have had that much fun.
Well, and high interest rates, right? Obviously, we're going to pay more for the loans we have, but there's a flip side to that too, right?
Yes. I'd say, and this probably won't make people very happy, but the interest rates we are paying on some of our car loans and home loans are really not that bad. They're actually, if you look at the historical, if you look at the last 15 years, which people are used to, it's
higher.
It's high.
Yeah.
But if you look at a longer period of time, it wasn't that unusual to have a 7-8% home loan or a car loan. Because I remember we had a 6% still on car loans a while back, and we had lines out the door trying to get that. And it's like, well, now they more like throw rocks at you instead of but what I'm saying is rates aren't that bad. And for those that are savers, finally they're getting a return, but the borrowers are feeling the impact.
So opportunity to save.
Mm-hmm. Yeah,
Right?
it's a great opportunity to save.
Okay.
Absolutely.
What are some tips on how we're going to weather this storm? Obviously, try not to overspend on your variable rates, maybe.
Yes.
What are your thoughts?
I think just be careful with the variable rates. Just be cautious on those type of borrowings, making sure that we're prudent. It's as far as homes, I'm one that says if you can afford the home, go for it. Don't wait, because when interest rates do come down, guess what? So the price will go up. So it's I'm saying the best time to buy a home is probably now, unfortunately. Things you can do also to help manage expenses. One of those I think is a big one. Right now there's so many subscriptions. I look at my credit card and there's subscriptions for everything. It's easy to let them get away from you. I had an example where I had one of those channels, those premium channels you pay for, and I don't know why you do that, but I was noticing it come across, and I get alerts every time. So I'd recommend get alerts if you can, because it's wonderful to know what's hitting your credit card. But I noticed it hitting twice. I said, well, that's kind of strange. I looked into it, and sure enough, I was being charged twice. So I contacted them, and I said, well, why am I being charged twice? And they found the error and fixed it. Didn't necessarily give me the money back, but they fixed it.
Yeah.
But those, you have to be vigilant.
Yeah, I love that. And set up alerts.
Alerts. I love alerts. It saved me more than once. I was once sitting there with my wife doing my email, and all of a sudden a text come in, or I guess it was one of the alerts came in and said, hey, you're purchasing this something, some sports good. I said, this is your credit card number. You purchasing something at a sports goods store? Because she's right there. It's like, well, no. It come to find out somebody had gotten her a card number and was purchasing a Yeti. If you don't, a Yeti cooler, they're pretty expensive.
Yeah,
I was thinking,
those are nice. Yeah.
But guess what? They didn't get their Yeti because I was able to stop it right there. I was able to go on the app, turn off her card, call in to Mountain America Fraud, got it resolved right away. And by the way, the crook didn't get their Yeti, so they were upset.
Well, that's good news.
Yes.
But alerts allowed you to do that.
Yes.
Okay.
And
so
that's
another way
a
to
big
save.
fan of alerts.
Okay, I love that. So we're going to obviously track our subscriptions, pay attention to those, set up those account alerts. When it comes to loans, anything that you recommend? Because obviously interest rates are higher.
There are a lot of estimates where they were going to come down later on this year. May not be until way late this year or early next year. We're going to see some relaxing on the rates. And it will impact primarily, it could impact all rates across the board, but you'll make it a little easier to buy a home and a car. But is it going to be what we saw before? No. It's still going to be higher than we saw over the last, 10, 15 years, but it's going to take some pressure off.
And then anything that you would recommend as far as like consolidation?
I'm a big fan of fixing your costs if you can.
Okay.
As far as if you can get a fixed rate and it's a reasonable fixed rate, it's usually better long term than a variable rate that has some risk associated with that variability, particularly right now, where this is a prime example of that. Yeah. Of course, right now, probably it's only going to go down, so it's probably not that big of a deal. But I'm a big fan of doing that. But as far as, consolidating into maybe a car or a home, I do it, but I always add a bit of caution. Your home is not an ATM, so don't use your credit card, charge it up and refinance on your home, because you want to be able to own that home at some point in time. So yes, get yourself on good financial footing, but no, don't use it as an ATM.
Yeah,
if that makes sense.
Absolutely it does. That's really, really good advice. You know, as we're feeling this inflation, as we're feeling these higher rates, can rewards programs help at all?
Yes. Rewards points are a big one. My son is graduating from high school, wanted to go on a trip. Guess who paid for that trip?
I would imagine maybe not your son.
Well, no. But nice thing is I paid for it, but it got all reimbursed through my rewards.
Awesome.
Maybe I spend too much money on my credit card, but I had enough rewards to actually cover Disneyland, which is an amazing thing, because you know how expensive Disneyland was. So it actually covered it, including the airfare. So kudos to the rewards. Yes, I'm a big fan of rewards. If I can charge it and use my Mountain America card, it happens all the time.
Happens. Awesome. Anything to watch out for, though, with rewards programs?
Well, I always view my credit card as an extension of my checking account. If I can't afford to pay it off at the end of the month, I try to avoid putting it on my credit card. And so I actually set my credit card to automatically pay off at the end of each month, so I'm not paying the interest on that. And that's easy to set up with Mountain America. I'll pay off before it's due, and I'm done.
And then you're not paying interest as well as earning rewards, right?
Yes, you don't want to pay for rewards because it's...
Yeah, that's fair. That's fair. Awesome. So we're in this inflation environment. Mm-hmm. Is it lasting longer than we expected? Is it a little bit stickier? Is it here to stay for a little bit longer? What are your thoughts? Why did inflation happen anyways?
Well, I mentioned a little bit about the level of stimulus that took place in the economy. Whenever there's a lot of stimulus, they actually put a lot of cash. And once again, you're getting into economic policy. It gets really complicated. But there's a lot of cash being pumped into the economy and a lot of stimulus being given with COVID, trying to make sure that there wasn't a huge recession. So some of that was necessary, but they didn't know when to stop. And I think they went a little bit longer than it should have. But anytime there's that much cash brought into the economy, it creates an inflationary pressure.
Okay.
And that's what we're seeing. And then you couple that with shortages, more inflationary pressure. It's a hard time. But as far as the supply, we're there. And I think we're seeing things normalize. But the inflation that we already saw go up, it's here to stay, by the way.
Okay.
It's not going down. Actually, that's kind of worse if it goes down. You don't want to, you don't want that deflation. That's bad. But it is going to be, as far as interest rates, they will stabilize a little bit. I do not see low interest rates coming in.
Okay.
Not barring an extreme, unusual circumstance, which I don't want to see, because usually there's something bad that happens to bring it that low.
Right.
Like the Great Recession that got our first set of interest rates really low.
Yeah. So for all of us out there that maybe, hey, we're feeling the higher interest rate, especially on maybe some of our variable debt, we're feeling that inflation. Mm-hmm. Any recommendations that you have for those folks? Like, do we need to be, checking our account so often, doing financial check-ins? What are your thoughts?
Anytime you have any questions, I would certainly visit a professional just to ask, hey, am I on the right track? It's always nice to know, and it's not just with retirement, but certainly with retirement. And the sooner the better with that, because it's nice to give you a lot. I mean, you say, well, I'm not retiring, I'm only 20 or 30. That's the best time to ask, am I on track, or what should be my plan going forward? We have professionals at Mountain America that can easily take care of your needs, visit with you, and just give you some tips and tricks just to avoid the pitfalls that can happen in any financial life.
Well, and you mentioned too your subscriptions, right? Paying attention to your accounts.
Yes, absolutely.
How often should I be doing that? I mean, you said regularly. What is regularly to you?
Well, with alerts, it happens as it happens.
Yeah,
that's really
true.
regular.
Yeah.
I check in at least monthly, personally. I make sure beyond the normal, alerts and whatnot. I make sure that I'm on track every time, each month. At the beginning of each month, I kind of do a quick assessment. It doesn't take a long time. I use a spreadsheet, and it probably takes me, maybe 5-10 minutes to say, okay, this is what I anticipated. This is where I am. This is where I project to be, even 5 months down the road. Am I on track? I'd recommend doing it at least monthly, just to really make sure there's no surprises that come along, because they can come up pretty quickly.
So, Sterling, are you telling me I have to have a budget? Is this something I just can't get away from?
Over the years, I've done budgeting in various different ways.
Yeah.
There are, software programs you can use where you have every category. I've heard of the envelope approach where you put your expenses into an envelope and only spend that amount. And what I use is a spreadsheet. It's pretty basic. It's just every day of the month, what I have coming in and what I should have going out. And it's more of a cash flow approach than a true budget. But in it is built, of course, a budget, because I know this is how much I have to spend for these different categories. And I find it works well because I'm able to easily project out. So I want to look for my long-term goals. This is what I want to achieve. And I have each month is a column. And so I can easily look at it and say, hey, in 5 months, if I continue on this trajectory, I'm going to have a negative balance. Or so in advance of when there's a problem, not, oh, I'm out of money. I think the main thing is do something. Don't leave it to guesswork. You should know a couple months in advance where you should be a ways out there. Just a heads up to know maybe I need to change the way I'm doing things. Maybe I need to cut expenses somehow. But without that warning, it's really hard to react quickly. And once again, I can't stress enough, have a good emergency fund. It doesn't have to be a huge amount, and you don't have to save it up overnight, even if it's just saving up, $10, $20 a month. I mean, just something. Just save it up so when something comes along, you're not caught without a resource there. My son was just complaining because his brakes went out. I mean, and he wasn't planning on that because he had some other large expenses with kids. It's hard. Yeah, I have my other son who's on the other extreme, and he says, I can't buy this car unless I have a huge amount of money set aside. So I applaud your need to be proactive, but you still need to live too.
I love what you've said because we all need to have a budget. You're going to find the one that works best for you, right?
Yes.
And maybe just anticipating some of those expenses rather than being reactionary.
Absolutely.
Maybe to wrap this up, what is your message for anyone out there saying, oh, the economy, if they say it's good, maybe it doesn't feel good, anything that you would say overall?
Overall, the economy, the fundamentals are strong. You don't have to worry about that right now. We're looking at, I think unemployment is my major thing. So looking at unemployment, it looks really good. If people can work and they can earn money, that's a good thing. Now we need to look at stabilizing the inflation and making sure that we're not overspending and getting into too much debt.
Okay.
And we just don't want to create a lot of financial stress for ourselves. But as much as we can do to just gain control of our finances. And that's where visiting with a Mountain America branch, one of our people they can help you out and just give you some tips to maybe put you in a little more solid footing. That's what I'd recommend.
So set up alerts, budget, save for a
just
rainy day.
Budget
we'll all
somehow.
Be good.
You got to know what's going on.
Okay, I love that. Well, I'm glad to know that our economy's doing well. Inflation's here to stay, right?
Well, for a while,
there's still hope.
There is still hope.
Awesome.
It is going to be. We're going to be just fine. Everyone's going to be just fine. It's just a rocky road for a little bit here.
Okay. Love it. Well, we appreciate you helping us along our navigation of that rocky road, right? As we go through that financial journey. So thank you for joining us, Sterling. We really appreciate your time today.
Well, great. Thanks for having me.
Yes. And thanks to all of you as well. And we will see you on the next episode of Guiding You Forward.